Public service announcement, SPY this morning opened up over the 50 SMA as we go for the back test. Back test does not hold market below the 50 SMA, so we're not long biased the stock market this morning. We're kind of neutral to bearish as we're below. We're going to add a little yellow line right over that 50 SMA so we can move into the 1 minute extended trading hours chart just to show you how the micro time frame is trading around that 30-minute simple moving average calculation. So essentially the market was below. This morning we come up, back test, then we break out. And then on our back test of the bullish breakout, it fails to hold, now break down. So now we have 1 minute volume weighted average prices anchored to that breakdown. That green little VWAP zone is our counter retrace target, and then continuation lower high if the breakdown is legitimate. Meaning if this break below that yellow line, as breakdown's legit, that means for the moment it will stay below VWAPs and roll lower. Whether it wants to bounce back up and hit them now and go lower, or whether or not it wants to fade out, pop back and hit them later, doesn't matter. That's the strategy. Wow, look at that. The market's going lower. Like, who would have thought? I mean, obviously me, and now all of you watching this video, because again, it's super duper simple. Remember, you just look at a regular trading hours, 30-minute time frame, and if the market, again, is breaking out above the SMA, you're long bias. If the market is breaking back down below the SMA, you are neutral to bearish. What just happened this morning? Right at the open, we had a break above, and that break above could not sustain, so it comes back below the SMA, so the market does what? It goes down. So obvious. So again, you can go around a bunch of different YouTube streams all afternoon, all year long, or you could either just follow this channel or just one strategy, the one we showed you, and you'll be on the right side of the market 95% of the time. So here's another part of the issue, right? So clearly the market gapped up this morning, but really the gap up was what? The gap up was to back test the trend and see, do we want to flip it positive, or are we going to remain it down and below and stay negative? So what happens is the news and like CNBC, they're going to be like, oh, the market's up big, and retail's going to get excited. So CNBC and news organizations will pump that overnight the market puts on gains, but really it's the market putting on gains to back test trend resistance. So then retail gets excited by it and they get shit on. This is the first time I've looked at news today. Let's see. Stock market news today. Dow, NASDAQ futures rise as November kicks off. S&P futures rise. Dow set, NASDAQ set to rise as Buffett's Berkshire. So basically all these headlines are talking about markets rising, markets are set to rise. And then what happens? You get pooped on. Why? Because again, really, this is just a back test of the 50 SMA trend, which we have not yet decided if it's meant to flip bullish or if it's going to reject and go bearish. So they just basically pumped retail and then made retail get pooped on.